Hey everyone, welcome to this explainer. I'm really thrilled you're joining us today because, well, we're looking at an absolute masterclass in strategic execution. Keysight Technologies is one of those companies that operates quietly in the background, but they are providing the absolute essential testing and measurement tools that make our entire modern tech boom possible. Think of them as essentially selling the picks and shovels for the digital gold rush. So today, we're going to evaluate their financial health, their really aggressive growth strategy, and figure out what all of this actually means for potential business investors. We're going to build the investment case step by step. Let's dive in. All right, let's just drop our anchor right here. $5.4 billion. That is Keysight's full year revenue for fiscal 2025. I wanted to hit you with this number right out of the gate because it instantly establishes the sheer scale of the company's return to growth. You see, they didn't just stabilize in 2025, they surged forward. It really proves that their business model is incredibly resilient, even when broader tech capital expenditures are bouncing all over the place. Now, what's really interesting about this striking red neon logo is how it perfectly captures Keysight's premium identity. They aren't just out there selling hardware, right? They're a trusted partner, deeply embedded across the most advanced technology ecosystems in the world. Their stated mission is to accelerate innovation to connect and secure the world, and as we'll see today, they are backing up that bold claim with some serious capital and total precision execution. Okay, here's our game plan for today. First, Keysight's return to growth. Second, segment revenues and margins. Third, their strategic acquisitions. And fourth, rewarding the shareholders.
All right, let's jump straight into section 1. Keysight's return to growth, looking at those financial foundations.
So looking at the revenue trend here, back in 2023, they hit $5.5 billion, but then they faced a bit of a dip down to $5.0 billion in 2024 during a period of, broader market normalization. But look at that rebound in 2025, a totally resilient return to growth landing at $5.4 billion. That is an impressive 8% jump, and it proves that customer investments are strengthening in key technology layers, and Keysight is just perfectly positioned to capture that momentum as the market speeds up.
But getting beyond just top-line vanity, these are the hard numbers that we as investors really rely on. Because it's not just about making money, it's about making it efficiently. Their highly disciplined execution led to a non-GAAP earnings per share of $7.16. That's a 14% increase. Plus, they delivered a massive 26% operating margin. That shows exceptional cost control for a hybrid hardware-software business. And actually, perhaps most importantly for future visibility, order growth was up 8% for the year, and it was accelerating in the second half. That gives them a very, very healthy pipeline moving forward.
Moving on to Section 2, segment revenues and margins, going inside the business. Now, when we split that 2025 revenue up, a really clear dynamic emerges between Keysight's two main segments. The Communication Solutions Group, or CSG, is definitely the heavier driver here, pulling in over $3.7 billion. Meanwhile, the Electronic Industrial Solutions Group, or EISG, brought in over $1.6 billion. Both of these are absolutely critical components of the machine, but CSG is clearly the powerhouse of the operation right now. Let's actually compare the specific market catalyst for each group. So CSG was up 9%. Why? Well, the rapid scaling of AI workloads is forcing massive, complex redesigns across compute, networking, and data centers. And literally all of that new infrastructure requires rigorous Keysight testing before it goes live. Add to that their work on early 6G and some record orders in aerospace and defense, and you've got a perfect recipe for high single-digit growth. On the flip side, ESG returned to growth too, up 6%. This was really driven by strength in semiconductor foundry investments and AI-accelerated demand for high-speed components in general electronics. Basically, both engines are firing on all cylinders. Which brings us to Section 3, strategic acquisitions and expansion, or as I like to call it, buying growth. I have to say, the pace here is just staggering. Let's trace this rapid-fire cluster of targeted acquisitions. Back in 2024, they picked up ESI Group for around $1 billion, right alongside Riscure and Anapico. Then, in just one single month, October 2025, they closed on Spirent Communications, which was a huge move where they actually outbid a rival. Plus, they grabbed Synopsys' Optical Solutions Group and Ansys Power Artist. October 2025 was literally a defining month for their M&A strategy. This timeline shows us a management team with incredible momentum and a crystal-clear strategic vision. So let's break down the synergistic value for us as investors. Why did Keysight buy these specific companies? Well, it's like a giant puzzle. They are systematically capturing critical layers of the technology stack. Spirent brings deep capabilities in positioning and wireless network test assurance. Synopsys OSG gives them a solid foothold in photonics and optical design. Ansys PowerArtist expands their role in early-stage semiconductor power analysis. And ESI Group brings heavy-hitting computer-aided engineering solutions. You see what they're doing? They are expanding from physical testing deep into software simulation and design. The crucial point is embedded right here in this quote from the 2025 annual report. CEO Satish Dhanasekaran states that these assets expand value across the stack, from early design through deployment. By transitioning from a traditional hardware testing company into a software-centric workflow partner, Keysight is essentially unlocking the holy grail for investors: higher profit margins, stickier customer relationships, and much more predictable recurring revenue.
And let's be honest, it takes exceptional leadership to integrate this much technology while still maintaining a 26% operating margin. Dhanasekaran and his executive team have demonstrated incredibly disciplined execution here. They've carefully navigated complex global tariff environments and supply chain headaches to consistently deliver these results.
All right, let's bring it home with Section 4, rewarding the shareholders and capital allocation. Look at this number. $1.3 billion. That is Keysight's record free cash flow for 2025. Now, free cash flow is the ultimate proof of financial health. It's the cold, hard cash left over after paying for operating expenses and capital expenditures. And it gives a company absolute flexibility to do great things, right? Whether that's funding the massive acquisitions we just talked about or returning capital straight to the owners. So what did they do with that cash? Well, a significant chunk of it was immediately deployed to reward investors. In 2025, they spent $375 million on stock buybacks. Now, by buying back their own stock, they reduce the number of outstanding shares. This simply makes each remaining share more valuable and increases your ownership slice of the company without you having to lift a finger. It's a fantastic mechanism. And this momentum, it's only accelerating. In November 2025, Keysight's board approved a massive new share repurchase program of $1.5 billion. That is a huge signal of extreme management confidence in the long-term value creation opportunity they see ahead. They are betting on themselves in a big way. Just to summarize their really reliable track record of capital returns here, since 2023, Keysight has returned over $1.5 billion to its shareholders. That represents roughly 45% of its total free cash flow over that entire period. It really proves that their highly flexible operating model thrives, generates incredible cash flow, and reliably rewards investors across vastly different macroeconomic environments. So we've looked at the return to top-line growth, the absolute strength of their internal segments, their aggressive software-focused acquisitions, and of course, their massive cash returns to shareholders. The evidence really paints a picture of a company executing at the absolute highest level. The only question left is this: is Keysight's innovation engine your next investment? Something to think about. Thanks so much for joining me for this explainer, and I'll see you on the next one.